What if there was a recession indicator tool that I could show you here today? And this tool is never wrong. Yes, you heard me right. It's never wrong. It's almost like a magic trick. Like, how could this be? How could a recession indicator never be wrong? Because you hear about so many recession indicators, and so many of them sometimes will flash a signal, then it never comes. This one's never wrong, and it just flashed. And this means we're either in recession right now, or we will be going into recession likely within the next 3 months. We're also going to speak about, after I show you that tool, exactly how that works, if there's other cracks emerging that are also all lining up to essentially showing that we are in recession, right? The NASDAQ just lost 2,000 points in a snap of a fingers, 3 weeks, and lost 2,000 points on the NASDAQ. Lululemon stock's now down 53% this year. Ulta Beauty's now down 30% so far this year. Estee Lauder down 34%. So far this year, the stock just hit a 7-year low. Celsius Beverage just went down 55% in the past 11 weeks, right? If we went back a month ago, a lot of investors were not that interested in selling, and now there's a line around the block all of a sudden, magically, and all these investors want to sell, and you get a 2,000 point move down in the NASDAQ in that quick of amount of time. The fear and greed index just hit major fear mode. We're almost into extreme fear in regards to the fear and greed index. It has been very, very close. A lot to get into in this video here today, guys. Hope you enjoy this. Hope you learn a little bit from it. Appreciate y'all joining me. All I need from you, hit that like button, smash that like button, gently tap that like button. I don't care what you do, but hit it and make sure you're subscribed to the channel. That's all I ask from you guys here today for this one, okay? Alrighty, so let's get into the magic trick. There's something called the Sahm rule. The Sahm rule is named for noted economist Claudia Sahm, who accurately forecasted every U.S. recession since the 1970s. Basically, the rule says that if the jobless rate based on a 3-month average is a half percentage point above its lowest point over the previous 12 months, the economy has tipped into a recession. Friday's job report that came out today technically meets Sahm's rules criteria. The jobless rate in July rose from 4.1% to 4.3%. ticking the 3-month average more than a half point above the 3.6 average from 1 year ago. Look at this in front of you. This is shocking. Never fails. It never fails. It's incredible. The magic number on the Sahm rule is when it goes above 0.5. Once it goes above 0.5, there's really no turning back and you're going into recession. And check this out here. Right back here in the 60s, sure enough, it went well over 0.5, boom, recession. Over 0.5, boom, recession, right? All these gray bars indicate a recession happening. Right here in the 1970s as well, boom, recession. 1980s recession right there, 1980s recession here. Right here, it led us right into the early 90s recession right there. The 2001 recession, 2001, 2002 recession right there. The great financial crisis, right, led it in there. Obviously the Rona recession right there. And now we're above 0.5, which means we're either in recession right now or we will be going into recession very shortly. This does not fail, okay? Now, if we look back at the great financial crisis, it first hit 0.5 plus in April of 2008, right? And that was before a lot of people had really begun to say, okay, we're in trouble. The economy is going to be in trouble. We're about to have a major unemployment cycle, right? And right now we're at 0.53, so we're actually above where we were in April 2008. Now, the scary part of this is the unemployment rate in April of 2008 was only at 5%. So it wasn't like it was at some crazy number yet at that point in time, right? And from there, it 2x'd, right? We went to 10% unemployment rate in a very quick amount of time. It happens quick, right? So when you look at something like right now where we're at, right, we're at about a 4.3% unemployment rate. So worst case scenarios, we could end up going to an unemployment rate of 8% plus, right, which would be absolutely devastating. It'd be devastating to the stock market in the short term. It'd be devastating to a lot of companies' earnings, obviously, right? It'd be devastating to a lot of people if we had an 8% unemployment. No bueno. I think the best case scenario out of this situation is maybe we stop the unemployment rate at about a 5 or 6% number. Now, keep in mind, the Fed's still holding us in extremely restrictive territory right now. Right now, the Fed still has an extremely restrictive territory, which means essentially, if they do start cutting, which they're going to start cutting here very shortly, likely September, right? Keep in mind, they're going to have to cut for a while before they can get us to some sort of rate that is non-restrictive, right? Keep in mind, CPI is around 3% right now. Fed funds rate's close to 5.5, right? So we're in very restrictive territory, like very, very restrictive territory. If we had a CPI at 5.5% right now, you'd say, okay, we're about where we should be. But not with CPI where it's at and the Fed funds rate where it's at. So right now you look out there, right? And because the Fed in an ideal scenario would have inflation at 2%, Fed funds rate at 2%. That would be like perfect, but it never really works that way, right? It never really works that way. So now keep in mind, a lot of people are looking at the Federal Reserve and they're saying, you know what? The Fed's going to start cutting. That's going to save the day. There's Fed lags. Whenever the Fed starts cutting, it's going to take 1 to 3 years to start having a positive effect on things. No different when the Fed started raising rates. It took 1 to 3 years to really start hitting us, right? And so there's Fed lags there. So assuming the Fed starts cutting in September, the earliest we'll start seeing a positive effect from that, the very earliest, would be September of the following year, which means September 2025. But likely you wouldn't start seeing positive effects from the Fed cutting until 2026 to 2027. This is something that has to be factored in. The Fed lags are significant, absolutely significant. Now, are we seeing other cracks out there that's showing, hey, not only there's a Sahm rule showing recession, but we're seeing other things? Well, this comes as no surprise to me that people are starting to talk about we're in recession or about to go into recession. And the reason is I look at stock market earnings. If you look at the top 15 biggest, most successful global brands out there, right, the most valuable brands in the world, this is them. Apple, Microsoft, Amazon, Google, Samsung, Toyota, Mercedes-Benz, Coca-Cola, Nike, BMW, McDonald's, Tesla, Disney, Louis Vuitton, and Cisco, okay? And I went through all 15 of those super valuable global brands and I said, okay, of these companies, which one has good earnings and which ones has very weak earnings? Very weak earnings mean growth rates significantly lower than where you usually grow your business at, okay? And what I found is almost all these companies have very weak earnings going on right now, okay? Apple, very weak. Amazon, very weak. Amazon just grew revenues only 10%. Like for Amazon, that's a bad number. Google earnings are very weak compared to how they usually are in regards to their revenue. Mercedes-Benz, very weak. Coca-Cola, weak. Nike's very weak right now. BMW's weak. McDonald's is very weak. Tesla's very weak. Disney's very weak. Louis Vuitton's very weak. And Cisco's all very weak. All those companies have growth rates right now that are way below where these companies generally grow at. And I mean way below. Some of these companies, literally, their revenues are going negative right now. That's how bad it's gotten. Only 3 of those 15 companies, I would say, have good revenue right now. Microsoft, which is one of the most bulletproof companies in the entire stock market, I mean, they put up good numbers regardless of what's going on, right? Samsung's good right now, but a lot of that is because of their memory side of their business and the AI boom there. So just keep that in mind, okay? And then you have Toyota, which has good earnings, but Toyota sells very affordable vehicles, and those have done very well, obviously, in the economy with the backdrop being what it is, right? But outside of that, it is no bueno out there. Each week in the private stock group, we put out this investor report, okay? And this dives into a ton of information, so because I understand like not everybody can keep up with everything that's going on in the market, all this economic information, company earnings. So we put together this like comprehensive report each Friday and release it to everybody in the private group, right? Pin comment down there if you want to join the private group. And it just looks over a bunch of different things. I just want to show you guys a few things from that report. AI and investor sentiment. This is strange and this is scary. Strange and scary, and let me explain why in just a moment, okay? So this looks at how investors are feeling about the stock market the next 6 months. Recently, this week, we're at about 45% of investors are bullish, which is significantly above the historical average. Neutral's is less than where it usually is at, and bearish is significantly lower than the historical average for the amount of people that are usually bearish. That is scary, very scary. Why is that so scary to me? The reason that's so scary is the market's already started to drop significantly. You usually know you're at the bottom of a drop in the market when the investor sentiment goes super bearish, like super bearish, and the bullish numbers reach very low numbers compared to historical averages, right? If you look back at late 2022, what you're going to find, and look back at like the fourth quarter, the third quarter, fourth quarter of 2022. Tell me what you find. You're going to find the AI investor sentiment numbers insanely bearish. Hardly anybody was bullish, right? And guess what happened? We bottomed out the market and we started to go up and up and up. And as we started to go up, people remained very, very bearish. It wasn't until the bull market had already been rolling for quite a while that people started to really flip over to that bullish side and started to leave the bearish side, right? Well, now we're in this dynamic where the market's already starting to downtrend. We just lost 2,000 points on the NASDAQ in 3 weeks, right? And yet people are still so bullish, which makes you think we might have a long way down here to get all these bulls off this bullish side and over onto the bearish side, and then we can talk about bottoming out this market. I would feel way more comfortable about a bottom in the market if we were way more bearish here. But the fact that only 25% of market participants or that do the survey each week are bearish on the market the next 6 months, I don't like that. I do not like that. Look at this. This is even scarier. So this is CNN Fear and Greed Index, right? It looks at market momentum, stock price strength, stock price breadth, put and call options, market volatility, and safe haven demand. Now, what scares me about this is these three over here, these are much more Wall Street related things. Put and call options, market volatility, VIX, right? And safe haven demand. This is more Wall Street type stuff, the rotation into safe haven assets, right? Buying put options, things like that. That's more Wall Street related stuff. And so the fact that we're starting to see so much of that, I don't like that. I don't like that. Because a lot of retail doesn't care about buying put options. A lot of retail doesn't care about safe haven. A lot of retail doesn't care about hedging and things like that, right? I have some phenomenal videos inside the private group going all into hedging strategies, taking you through it all. Some people watch it, but a lot of people just aren't into that from the retail side. They don't really care about hedging their portfolio. That's more of a Wall Street related thing. That's more of like high income, big asset type thing, right? And so seeing that Wall Street's taking that stuff more serious makes you kind of say, ooh, what are we in for here, right? Because we know if they want to start betting against this market, they want to make some money here, right? Which they're going to, if anything, they're going to try to force a situation in which they make money, right? Now, if you look at economic indicators, unemployment rate 4.3% now, right? Keep this in mind. The long-term average for unemployment is around 5.7%, which is also another thing that's kind of scary in regards to this, that we're even with the NASDAQ dropping as much as it has, right? We got a long way to go just to get back to kind of the long-term average unemployment. And you got to keep in mind, this is a lot of jobs being lost. If we were to go to 5.7%, I'm telling you, that's so many jobs lost. And so this is a little food for thought in regards to that. That's another thing I look out there and I'm like, ooh, that's kind of scary in regards to that. Now, if you look at the Small Business Optimism Index, this is very interesting. It reached the highest reading of the year in June, right? It's a kind of a backwards-looking indicator, like a lot of these indicators are. But it did reach a high in June, a 1 point increase from last month, which is, that's good for small business, but this isn't necessarily really good for the stock market, right? And the thing you got to understand is small business optimism was really in such a bad place for a few years, and the reason was their supply chains got destroyed, right, coming out of Rona. We obviously had then the Fed raise rates at the fastest clip we've really seen, which obviously very negatively affected interest rates. If you're a small business out there and you need to count on debt, the debt markets, right, your cost of business just went up substantially. Additionally, wages you had to pay your employees went through the roof, right? And anything that had to do with running a business went through the roof as far as pricing. Let's say you're a mom and pop pizza restaurant, right? You got 1-2 locations. There's a high probability that your rent went up in 21, 22, 23. You don't feel so good, right? So when all that starts to subside, you start to feel better about your business, right? As long as the unemployment rate stays low. Now, if the unemployment rate ticks up in a significant way, then small business is going to go back into a negative territory. They're not going to be happy again. But for right now, small business is in a good spot, but it doesn't necessarily bode well for the large companies. So that's a little food for thought in regards to that. The Russell's down 7% just in the past 5 days. And people's opinion of the Russell and small cap stocks are all over the place. It's like buy, sell, buy. 1 minute people are risk on, the next minute they're risk off. Sentiment's changing so fast in regards to this. And we're in earnings season right now, which helps people's sentiment change even faster, right? And so it's an incredible situation seeing the Russell make these sorts of moves, because it's just like, go back 2 weeks ago, and all of a sudden everybody wanted to own small cap stocks. Everybody wanted to own the Russell. You know what's exploding to the upside right now? Volatility. The VIX is exploding. The VIX has been dormant for basically since 2022. Basically since SVB that happened, the VIX has been dead. It's been completely dead. it's back alive. It came out like the Undertaker from the casket, okay? The VIX in just the past 5 trading days is up 47%. In 5 trading days, an incredible move for the VIX. And keep in mind, we're not necessarily in crazy high territory yet in regards to VIX. We could go up much higher than that. Now, if you see the VIX go, I would say over 30, and especially if you see it go over 35, that's usually when you're getting close to a bottom in the market at that particular time, because that's just like the VIX getting out of hand, okay? So right now we're in an elevated VIX area, but we're not to insane levels. You go to 30, you go 35 on the VIX, and especially if you go above that, you're getting really, really close to a bottom in the market. So, just a little food for thought in regards to that. Now, remember the time period we're in. I'm recording this video August 2nd, okay? August 2nd. Remember what the 2 worst months are for the New York Stock Exchange, right? The 2 worst months are August and September. And we just started August. So we're actually in a time period that very often the market does not do very well. Okay, so this is more food for thought. A lot of people are hoping for a short-term bounce back in the market here. First off, if you're an investor, why are you hoping for a short-term bounce back? You should want stocks to go as low as possible. Like if you love Shopify, why not buy it at $40 instead of $50? If you love Amazon, would you rather buy it at Amazon at $180 or $120? I'd much rather buy it at $120. I can get a lot more shares at $120 than $180. So if you're an investor, you should kind of hope this continues on. But the people that are more traders, haven't really been through the market, don't understand the game of like when stocks crash, you buy the dip and it's like the best opportunity you ever get, right? As people that went through the market, people that, listen, who's watching this right now that we were buying stocks in 2022, specifically tech stocks? Listen, I need you guys to come to preach to some of the newbies that don't know this game. This is the best opportunity. Tell people about the stocks you were buying in 2022, the tech stocks you were buying, and the sorts of prices you were buying those tech stocks at. I know there's a lot of you guys watching this. I need your guys' help in that comment section, because a lot of these newbies, they don't understand the whole game of like, when you get these sorts of opportunities, and you're going to get them in different stocks at different times, you got to explain to them like what pricing you got some of these stocks at in the past. Because I bet you there's people watching this video right now that were buying Meta stock under 150, right? A lot of you guys were buying Amazon under 100. You were buying a lot of these stocks. You were buying Nvidia at, prices that are like a complete joke. You probably made 300, 500, 700% on Nvidia stock since then, right? And AMD and all these different stocks. And so I need some of your guys' help in the comment section to explain to some of these newbies that this is the best opportunity. Tell them what you were buying some of those tech stocks for back in 2022. Because now we're going through a time period when you're getting a huge discount on other stocks and people don't quite understand it. But the moral of the story is, this is the time period that the market usually struggles, okay? And so if the market continues to struggle for the next couple months, just don't be surprised. It's normal. It's normal. Don't overreact to it. It's normal, right? This takes a look at the S&P 500 from 1980 through 2019, so a 40-year, 4 decades there. Guess what the only 2 months that were negative? The only 2 months over that 40-year span, August and September. So additionally, don't overreact in seeing the market go down if the market goes down for this next month or two. Listen, we're in the time period when the market usually goes down, okay? So just a little food for thought in regards to that. Now, additionally, we have something, again, working against us in the short term. We have a lot of things working against us in the short term. When I say the short term, I'm basically talking about the next 30 to 60 days here. Harris is polling a lot better, okay? I'm just going to be honest with you guys. It looked like Trump was going to win the election by landslide when it was him versus Biden. I can tell you things have changed a lot since Harris became the nominee on the other side. And this is becoming a dogfight now. This is going to be a close election. I can tell you this is going to be a very close election. And so Harris, although Trump is still winning in the polls, it's getting closer and the market's getting freaked out. Because the market wants Trump for a lot of different reasons. One of the reasons he's talking about, he wants to lower corporate tax rate down to 15% from 21%. That gives another 6 additional percentage points of profit to companies rather than the government each year, right? I mean, that's a huge deal. And so Harris has talked in the past about taking corporate taxes up to 35% from 21%. So we're talking about we could get somebody that might want corporate tax at 15%. We could get somebody that might want corporate tax at 35%. Now, could either of them get 15% or 35%? through, I'm not really convinced of either, just to be quite frank with you guys. But there's a significant risk. It's not a small risk, it's a significant risk, okay? And so when Harris starts to pull better and better, the market's going to get more and more freaked out in regards to this. This is poly market. As far as Harris, the 2024 election just hit an all-time high on poly market. Once again, Trump still expected to win the election, but the fact that Harris keeps moving up the ranks, I'm just telling you guys, the market's getting more and more freaked out over this, okay? Which obviously is causing a lot of short-term problems in regards to the market, right? Now, additionally, you're having stock after stock after stock that are major companies. They're calling recession. This is Micron. Probably 50% of you guys know Micron. Probably 50% of you guys watching this video, you don't know Micron. Micron's a memory chip giant, okay? Memory chip giant. And this company is basically calling recession. And when I say the company, I'm really talking about the stock price. The stock price is calling recession, right? The stock in a snap of fingers gone from 155 to 92 bucks. I mean, look at that. It's off a cliff. It's off a cliff in a matter of just 2 months, right? That's a recessionary move. When a stock moves down that rapidly, a memory chip company like this, it's calling recession. Oobity booba, Uber stock. That's calling recession, right? And if you feel like a recession's coming, travel slows down, the amount of Uber rides needed slows down. You could get price battles in between Lyft and Uber and that sort of situation, have margins get hit. You could get less orders on Uber Eats, slow down growth rates there, right? I mean, it's a whole dilemma and dynamic that would essentially happen. And I'm just telling you, look at this move down in just a matter of a few months in regards to Uber. Uber's calling recession in regards to the stock price. That's calling recession, okay? Shopify stock is calling recession. Look at this move in just the past few months there. Whew, vicious. That's calling recession. AMD's calling recession. This stock just a few months ago was $210 plus, 212, right? It's down to 132 here today. AMD stock is calling recession. Lululemon, this stock is now down 53.6% this year. Let me be crystal clear about this one. This one's calling recession, but it's also calling more than recession. If you get a stock to go down 50 plus percent, basically there's worries about the actual business model, okay? There's worries about Lululemon in a recessionary scenario, how they would adapt their business model in that, but there's also worries about the overall business model, okay? So a little food for thought in regards to that. You can get a 30-40% drop in a stock based upon recession and fear about recession. When you talk 50% plus, now there's fear about recession plus more, right? Look at something like Meta. Meta in 2022 dropped 70% peak to trough. Why? Well, a lot of people got concerned about potentially recession, those sorts of things. But additionally, people got concerned about Meta's actual business model. So that's what's going on here with Lululemon. And no one knows where the bottom's at, Lululemon. It could fall another 50% from here, right? Like, we don't know. Like, imagine if they actually come out and report like a bad guidance number or something like that, like a really bad guide that's way underneath the street, and they take down all their numbers for 2024. Could you see the stock fall another 50% from here and go down to 120 bucks? It's a possibility. I wouldn't bank on it, but it's a possibility, folks, okay? Look at a stock like Celsius. Celsius is calling recession plus, more here. This stock's down 55% in 11 weeks. 55% in 11 weeks for Celsius? But a lot of people are worried about, hey, if unemployment goes up, not as many people drinking energy drinks. It's a fear that's out there, right? And you can see Monster as well. Look at Ulta. Ulta stock is calling recession. Look at the drop. It's off a flipping flapjack and cliff. I mean, it's an incredible fall in the stock, right? That's 100% calling a recession. A brutal move for Ulta. They view it as, hey, not as many women are going to be going in there to buy cosmetics products, beauty products. And so, therefore, the numbers are going to be bad the next, 6 months, 12 months, something like that, right? Estee Lauder, same exact situation. The stock's at 7-year lows right now. It's calling recession. Wynn Resorts is calling recession. Look at that move. Wynn's numbers have been great, by the way. So you look at something like this, and you're like, how are Wynn's numbers so amazing, and yet the stock just can't stop falling? Because it's pricing in that the numbers are not going to be very good 6 months from now. Okay, that's what it's doing, where it's going to start reporting numbers that maybe are declining on a year-over-year basis. That might not happen, by the way, but that's what's pricing in here, right? We did, a little birdie told me something about MGM supposedly is talking about F1 room rates, which F1 race will be in November, down something like 50% year-over-year. Like they fell off a cliff. I don't know, that's a little something there, right? That's a little worrisome. Nike's calling a recession. You don't get Nike almost ever down 30% plus on a year to date. I mean, Nike's been a public company for 40 plus years now, and there's probably only been maybe 2 or 3 times ever the stock fell during the course of a year 30 plus percent. That's an extraordinary move there. UPS is the economy. They are the economy. And that stock's down about 32% in the past year. UPS stock is calling recession. Whirlpool, I mean, the biggest American company that you know of that sells washers and dryers and ovens and all these sorts of things, right? And guess what? That stock's calling recession. That stock's down 32% in the past year, calling recession, saying no one's out there going to buy fridges and washers and dryers. They're going to keep whatever they got going on right now, right? Now, next thing you've got to remember here is the NASDAQ. The NASDAQ and the market in general, it bottoms way before the bad news bottoms, okay? So if you look back at any time period throughout time, the market always bottoms before the bad news bottoms. You always get a lot more bad news coming, and these stocks already are moving up huge, and people are looking out there and like, why are these stocks moving? There's so much bad news, right? So what we're looking at here is NASDAQ, right? The NASDAQ bottomed March of 2020, right? Did the bad news end in March of 2020? No. I mean, the news got so much worse after March of 2020, right? Into April, into May, about the unemployment rate rising. Oh my gosh, it's getting worse and worse. More and more companies shutting down, more and more layoffs coming, bankruptcies, all these sorts of things, right? It was a mess. It was a complete mess. The bad news did not bottom. Company earnings for the next 6 months were horrible numbers from these companies. Companies' numbers didn't really start to turn around until the beginning of 2021 for most of these companies, right? Yet the stock market already bottomed out way before that. Look at this crash right here. This was obviously the 2022 crash, right? NASDAQ-related stocks bottom out in October 2022. Keep in mind, the bad news didn't end there. After that, you got a ton more tech companies announcing they're doing hiring freezes. They were laying off a bunch of employees. Their numbers were trash for that next couple quarters, right? Their numbers didn't really turn around for a lot of these companies till the back half of 2023. Even NVIDIA. Look at NVIDIA's numbers. It didn't really start to get good till the back half of 2023. Meta, Amazon, right? The back half was when things started to turn up. And yet people are looking and they're like, why are all these tech stocks coming out? Because they looked at the earnings over the next couple quarters and they were trash. And like, how are these stocks going up, right? This is what always happens. It's pricing in the future, right? So you might look at something like a win, right? And the stock just keeps going down and down and down. It's likely going down because the numbers will get bad over the next few quarters, right? Not right now, but in a few quarters from now, you'll see that, right? And then you'll be like, oh. And then when the numbers are coming out bad, the stock will have already bottomed and started moving up. And people are going to be like, why is it moving up? The stock is, the numbers are bad. Why is the stock moving up? And it baffles people. But you got to understand the market's 6 to 9 months playing ahead. It's a game of chess, and it's a playing ahead, okay? And so that's, usually you're at the bottom when the masses are talking about it. So for instance, no one was really paying attention to Rona much outside of really stock market investors for the most part. And by the time everybody had got caught up into what was going on with Rona, right? Guess what? The market bottomed within a week or two of like the masses talking about, whoa, Rona, like what's going on? We're shutting down the economy. Like what? I don't go to work. I got to work from home. Like what's going on here? And by the time the masses were talking about it, right? Market had already bottomed and started moving up, and everybody's already freaking out, right? And you look at the 2022 situation. By the time, no one was really talking about the devastation that was happening in tech stocks other than stock market investors until the second half of 2022. Then all of a sudden the masses started talking about it and paying attention like, whoa, what's going on with Meta stock? Whoa, what's going on with, Google stock and Shopify and Netflix and all these companies? And by the time the masses start talking about it, we were already bottoming out. Okay, so that's another good food for thought, that once the masses start talking about it, you're likely in the bottom territory, okay? Now, what was I doing today? Big downward day for the public count, $75,000 down. By the way, I feel thankful that it was only $75,000. Like on a day like today, I look out there and I'm like, it could have been a lot worse. Could have been a lot worse. So what was I doing out there today? I was buying stocks. I buy every single Friday, right? I was buying stocks. I bought stocks in the public account. I bought stocks in the Patreon portfolio. I bought stocks in my private portfolio. I bought stocks across the board, right? I never waste time with these sorts of time periods we're going through, right? And there's very select stocks that are the most attractive buying opportunities. whenever you go through one of these time periods where the market's dipping fast, you get a lot of opportunities in the market, but there's certain special opportunities. So if we look at like 2022, for instance, right, where were the special opportunities in the market? That was in tech stocks. It was not actually in consumer stocks. Look back to Starbucks stock and Nike stock and Lululemon and those sorts of stocks back then. That wasn't where the real opportunity was. The real opportunity at that particular time was tech stocks. Shopify and Meta and Netflix and all those sorts of companies, right? Apple, Microsoft, Google, like go through the whole list of them, right? Tesla got all the way down to, what was it, $100 at the beginning of 23, end of 2022, right? $101, something like that. That was where the real opportunity was. And so in this market, it's a little bit different. Like, I think a lot of these tech stocks are decent values, but that's not where the biggest opportunity was. And if you go back to 2022, a lot of people were investing into oil and gas stocks toward that back half of the year. Dude, you know how bad oil and gas stocks are done? Like, since that time period, like, that was not the play. Tech stocks were the play. You got to look to where the most beaten down sectors and industries are. That's where the real opportunity is at that particular time. And so right now, you know where the biggest opportunity is? In a lot of these consumer names. They're the most beaten down, trashed out stocks. That's where the biggest opportunity, the most money will be made over the next 3 years. Over the next 3 months, those could be even hit stocks that are all hit a lot harder. But over the next 3 years, those are going to ultimately end up being the best plays with some of the best returns. People will look back and be like, whoa, can you remember when that name brand company and that name brand company was, you know, at that sorts of price? So I never waste time. I never waste time in this. And I know I'm not going to buy the bottom, right? And, I mean, Meta, I got pretty dang close. I did get some shares for $88.94 for Meta, but yeah, I was buying Meta at 100. I was buying Meta at 100 something, right? I was buying that whole massive crash down. I'm never going to buy the bottom. The bottom line is I look at it and I say, is this stock stupid pricing? If it's stupid pricing, I'm buying. So Nike at $70 is stupid. I'm going to buy the stock. Estee Lauder under 100 is stupid. I'll buy the stock. If you want to send it down to 50, send it down to 50. That's fine with me. I'll pick up those shares at 52 and make a bunch of money. And then 2-3 years, people will think I pulled a magic trick out of my hat again. Okay? Like, it's not a hard game. You just got to understand you can't waste time during these time periods. And you have to be okay with understanding you're not going to get all these shares at the bottom. You just got to take advantage as the market goes lower, as these stocks go lower, and buy. You know, think about if you were around in the great financial crisis, right? And let's say, you know, I started investing in the great financial crisis toward the end of it, but it was like such small amounts of money. It was minuscule. It was like a couple $100 here and there, right? But imagine you had real significant money in the great financial crisis and, you know, stocks start crashing, whole market starts going down and you're buying the dip and you're buying the dip and you're buying the dip and the market just bleeds for like a year and a half straight, right? And you're buying the dip the whole way down, right? Do you know what the market was back then? Like, do you know what the NASDAQ was back in the great financial crisis? Like, I don't think a lot of people are like really educated, especially a lot of noobs. They don't understand this. They don't understand the game, man. They really don't get it. And I understand, like, if you haven't played the game, you don't understand the rules of the game, right? Like, I get it. But imagine, let's look at this here, okay? By the way, the NASDAQ, even after it's crashed 2,000 points, is what is the NASDAQ at here today? Like, some ridiculous number, the Qs. So look at the Qs. So you could have been buying the Qs here, you know, been buying it here. Oh, I bought some at 47. Oh, I bought some at 46. Oh, I bought some at 41. I bought some at 33. Oh, I bought some at 29. Oh, it won't stop crashing 27. And everybody's laughing at you. Oh, you bum. You're buying the stocks. You just keep losing money. You dork. You should have kept it in cash, right? And then the market starts going up and you buy some at 30 and you buy some at 34 and you buy some at 38 and you buy some at 40 and you buy some at 46 and then you buy a fucking yacht and you never ever invite those people on your yacht. Never, because they're a bunch of freaking bums and they don't even understand the game. And you're not going to play chess on your yacht with these nerds that don't even know how to play the game. All right, guys, I got a video that came out late last night. Not sure how many of you guys got to see that yet. 5 stocks I'm buying now, August 2024 edition. Enjoy that video if you didn't get a chance to see it. That goes through, you'll definitely learn a lot from that video. It's not just, whenever I produce those videos, it's not just about those specific stocks. It's always about teaching you how I look into these companies, how I understand them on a higher level, like what you need to look for in companies. Like, that's why ultimately I produce those videos. Like, I never care if anybody buys those stocks. Like, it means nothing to me because if I got Nike stock, no retail is going to change that stock price. Like, there's people in my private stock group that got millions, tens of millions of dollars. It doesn't matter. Like, if you go put $1 million in Nike, the stock's not moving. Like, you need to be putting billions to move that stock in a significant way, right? So I never care if somebody buys those stocks, but those videos are phenomenal for teaching exactly what I'm looking for in these companies, how I research them, and so take advantage of those videos, man. They're very, very valuable, and it's not why most people watch it, okay, guys? Appreciate you joining me as always. The pinned comment down there if you're looking to take your game up to a much higher level than where you're at right now. Learn everything I got up here across the board, how to identify the next great companies, run portfolios, all those sorts of things. You can click the pinned comment down there, apply to join my private group, apply to join 1000X there, and get access to all that good stuff. So, yeah. Got to record a video for my private group actually right now. Okay, guys, appreciate you. Much love as always. Have fun out there and have a great day.